All right. So in this class, I want to well moving on to this class and how you combine everything, getting your structure shift or your double break of structure, depending on whether you're looking for reversals or whether you're looking for continuations. And then I gave you guys an example of trades that I took with an order book, explain price order take. Price sometimes buys from the order block and price sometimes buys from a different POI. And I said the POI is called breaker block. So now, what is a breaker block? A breaker block is a failed order block. What would I mean? A breaker block is a failed odd zone. You understand that's why I said this class is not for beginners. You understand the concept of support and resistance. If you have like your resistance here and your support down here, markets will keep now bouncing and bouncing, and eventually markets will either, let's say, it breaks the resistance or it breaks the support. But the thing is that whichever side market breaks, whether this upside or the downside, one thing is constant. Price will eventually retest to the resistance here before it continues buying. The same way price will eventually retest to the support here before it should eventually continue selling. That is the same concept of what a breaker block is. A breaker block is a failed order block. The thing is that with support and resistance, you can't really pinpoint the zones where the reversals will come from. But in breaker blocks, you can actually tell which POI market is going to come to. Now, a breaker block has the shape of other blocks. What a breaker block is, let's say you see this uptrend now, for example. Once you have an uptrend and then price does something like this, makes a higher high, the body of this high that was taken out is now a breaker block. If price makes another higher high, the body of this high that was taken out is also now a breaker block. But the thing is that when it comes to picking entries, we really focus on, like if it's a break or structure, we only wait for like double break or structures before we can mark our breaker blocks. You do understand? Because if you are picking, because every single break, there's a breaker there. For example, the moment this high right here was taken out, this high, then the body of this high, this candle right here, becomes a breaker block. The moment this high here was taken out, the body of this high becomes a breaker block. The moment this high was taken out, the body of this high becomes a breaker block. Same thing, the moment this high was taken out, the body of this high becomes a breaker block. The moment this high was taken out, the body of this high becomes a breaker block. So every high, every low that price takes out, the body of that high or low becomes a breaker. The moment this low was taken out, the body of this low becomes a breaker. The moment this low was also taken out, the body of this low also becomes a breaker block. And how you use breaker blocks is that a retest to that zone, a retest to that breaker, you have to now use the body of that zone to continue trading in the new direction that market gave you either a break or structure into or a market structure shift into. So every zone that price takes out, the body of that zone becomes a breaker block. The moment this low was taken out, the body of this low becomes a breaker block. The moment this high was taken out, the body of this high becomes a breaker block. So every zone that price takes out, the body of that zone automatically becomes a breaker. So that is what a breaker block is, a failed order block or a zone that price breaks past. That is what a breaker block is. Even if it's just a mini zone, the moment this low down here was taken out, the body of this low becomes a breaker. And how you trade it is that every test to that body of that zone, you now start taking trades for the market in the new direction that the market broke into. So this breaker block is also another POI that I make use of, aside the other block. And the thing is that a breaker block will always exist in your setup, provided there is a market structure shift or a double breaker structure. An example of that is this. Let's say you have an uptrend, and market is giving you higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, then market happens to give you a market structure shift. The moment that market structure shift candle closes, you have to look upwards to find the possible points of interest. So if you look upwards, this low that market just took out, the body of that low automatically becomes a breaker block. This low that market took out also, the body of the low also automatically becomes a breaker block. Then up here will now be the other block that triggered that move to happen. You guys understand what I'm saying? So the moment price takes out any zone, the body of that zone becomes a breaker. And how you use the breaker is a retest to any of the breaker block. You now use and continue taking trades in the new direction that market broke into. So you either use in the sense of market structure shift or use it in the sense of double breaker structure. But you should not be marking a breaker block if you have not seen a double breaker structure or a market structure shift. So it's only when market gives you a double breaker structure or a market structure shift that you can now mark out your POIs. Same way, if market does something like this, say there was a previously existing high here, the market starts giving you higher highs and higher lows, and it gives you a higher high. Automatically, when market broke this high, the body of this high becomes a breaker block. But since this is not a double breaker structure, we're not going to be looking for entries here. So we're going to disregard this breaker and the other block here. Market will give us a retest, give us what? Another higher high. When market broke this high, this is a breaker block. The body of the high that was broken becomes a breaker block. But since this is not a double breaker structure, we're not going to pay attention to it. Market gives us a retest again, takes out this high, also a single breaker structure, but this is still a breaker block, the body of the high. But since this is not a double breaker structure, we're not paying attention to it. If the market now gives us another lower high, another higher low, and then gives a higher high, taking out this high plus this high. So the moment this happens, we've already gotten a double breaker structure. So the moment the market closes above these zones, you have to now look downwards to find the possible points of interest that exist here. So if you look downwards, this high that was just taken out, the body of the high will now become a breaker block. This high that was also taken out, the body of the high will also become a breaker block. Then down here, finally, will now be the other block that triggered the move to happen. So you see, you have what? A breaker here, and another other block here, meaning that you have three possible points of interest that price can react to. In this setup here, when price gave us what? This double breaker structure, taking out this high, and then this high. This is what? A double breaker structure. And if you look at the zones that was taken out, the body of this high automatically becomes a breaker. The body of this high also becomes what? A breaker. And then this is the other block that triggered the move to happen. But one thing you notice is that this breaker here and this other block here, they actually overlap each other. They're on the same line. So technically, they are now the same POI because this is a breaker. I think ICT concept, I don't trade ICT, but I've seen them call it, I think it's Unicorn model. I don't know. I don't really know. But these two POIs are overlapping. So basically, they are the same because this POI and this POI are on the same line. But if they were not, I would have marked them as two separate points of interest. I'm just telling you that the moment that this high here was taken out, and then this high also was taken out, the body of this high and the body of this high all become points of interest that you can use as your entries. Same way, um, same way here. The moment price took this low out, and also took this low out and closed below, if you look upwards, you will find your possible points of interest. You see this breaker block here? The body of this low that was taken out becomes a breaker, and then the body of this low also that was taken out also becomes a breaker. Up here becomes what? Another breaker. But the reason why we did not start looking for trades here was because when this low was taken out, there was no double breaker structure here, so we're not looking for any POIs here. We only start looking after the double breaker structure. So the moment that price came taking this low out and this low out, that was when we got our double breaker structure. So that's why we can now start looking for the POIs there. So if you look, you will see what? You will see your breaker, and then the other block that triggered the move to happen up here. So you actually have up to 1, 2, and 3 points of interest here. So that is when it starts confusing you. I have multiple POIs. Which points of interest should I actually make use of? I have this breaker block here. I have this breaker block here. I have this other block here. What do I do? Some people will go to the extent of what they will do. They will put a sell here. They'll put another sell here, and they'll put another sell here. Then if this one hits stop loss, they'll move to the next one. And if the next one hits stop loss, they'll move to the next one. And if the next one hits stop loss, they'll move to the next one. Some will even go as far as placing their entries at the first one, but making sure their stop loss covers everything here. That's what some people do. That is not the right way to trade. There are rules in picking a point of interest that narrows everything down for you. Please hope you guys are following me up. Someone is already asking me which one is more valid. That is what I came to do. And I'm here to teach you guys the one that is valid. So you just have to wait for me to teach. Someone said my video is lagging, and the other people are saying that the video is not lagging. It's not lagging. If it's lagging, it's from your network. And if it's lagging, you just have to watch the recording later. It's not lagging, it's the network. Mhm. So that is it. So multiple people have there are multiple scenarios where there are multiple POIs existing in one setup. That's why you need to get clarity by understanding the rules in picking a proper point of interest. That would narrow everything for you. So another example of that, if you see here, what the market do here, there was just a single break of structure, no penetration to it. But when price came here, it took this high out. While taking the high out, it took this high. Okay, same thing. It also took this high out. After that, we got a proper inducement before price. This was not the inducement because I cannot really see any inducement here. Let me zoom in and see if I can see any inducement. Well, okay. I think I can count this as an inducement because it's a small retracement pullback. So it's an inducement. It is an inducement right here. But if you check the points of interest you have here, the moment this high was taken out, the body of the high becomes a breaker block. The moment this high was also taken out, the body of this high also becomes a breaker. Then down here would be the other block that triggered the move to happen. So we got a double breaker structure and 1, 2, 3 point of interest. Here, in this zone, the market was on this downtrend, giving us lower highs, then lower lows, lower highs, then lower lows, lower highs, then lower lows, and eventually price took this high out, giving us a market structure shift. The moment that happened, we already got the first part of the strategy. So whenever the candle that caused that market structure shift to occur closes, you have to look downwards to find the possible points of interest. And if you look downwards, the body of this high that was taken out becomes a breaker block. So you mark it out as one POI. Down here is the other block, second POI. Down here also is also another other block. This is another block down here, third POI. So you have 1, 2, and 3 point of interest. So like I said, in one setup, you can have multiple POIs. If you have a downtrend, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, then market structure shifts. And while it was happening, this high and this high was taken out. The moment the candle that caused that market structure shift to occur closes, You have to look below to find the possible point of interest. So because this high was taken out, the body of the high becomes a breaker. Because this high was taken out, the body of the high also becomes a breaker. And then down here, you will see the other block that triggered the move to happen. So you can have two other blocks in one setup. You can have two breaker blocks, three breaker blocks. There is how to navigate everything and pick the one that is more valid. And that is what I'm going to teach you guys right now. So without further ado, we will navigate to the rules of picking a proper point of interest. But before I continue, I want to ensure, hope you guys are still with me. And also, someone asked me a question now. They said, must it be one candle that breaks the two? No, it must not be. Let me give you an example. Let's say something like this is happening. Lower high, lower lows, lower highs, lower lows, lower highs, lower lows. Then market tries to break this high, but this candle stops here. Another one picks up and stops here. Another one picks up and stops here. The third one can break this high. It's only when this third one breaks this high that you can mark a market structure shift. So you must not be one impulsive candle that does the break. One can go up and stop and stop and stop until the high gets broken. Just like this, for example, this low was not broken with one candle. Came here and closed inside here, made the retracement and still closed. But it's only after this zone was closed, was taken out, that I can now mark that the break of such already occurred. So it must not be one candle, but you just have to make sure that before you can start looking for inducement or anything, that zone has to be taken out first. It must not be one candle. Sometimes it can be one candle, sometimes it cannot be. Here, this zone, market tried to take this low out, but this candle did not do it. It closed inside here, but the next candle that came out eventually broke it. So it's only after it getting broken that I can mark a double break of structure. Do you understand? So I cannot start looking for POIs if that zone has not yet been taken out, but it does not mean that it must be taken out by one single candle. Multiple candles can do it, but it means that you can only start looking for the POIs after those multiple candles have completed the cycle of breaking that zone. Do you guys understand what I mean? And people are also asking the time frame. See, the time frames. This is why I said the class is not for beginners. Time frames does not really matter. It depends on the kind of trader you are. Candlestick is candlestick. On 1 minute time frame, if you're a scalper, you can see a market structure shift, inducement, and point of interest, and you trade it, and you will go in your direction. But your take profit level will have to be on that 1 minute time frame. If you're a day trader, I would recommend sticking to the 30 minutes time frame, 45 minutes time frame, and 1 hour time frame. These three time frames will do magic for you. So in fact, all through last week, I was teaching you guys. I was only on one time frame, and I was able to show you guys what the setup I showed you guys. If you're a swing trader, then that's when you now start going to 1 week and 4 hours time frame to look for your structure shifts. The candlestick is candlestick. It's just that it depends on the type of trader you are. Do you understand? So that's just it. So now it's time to move on to the rules in picking a point of interest. So there are four rules that I pay attention to before I look for a POI to pick. That helps me narrow down everything to having a tighter stop loss, because if you're confused on the point of interest to pick, you wouldn't exactly know where to place your stop loss, because you can have two POIs here. Let's say, for example, you have this OB here, this breaker here. You're confused on which point of interest to pick, because whichever one you pick, it will look like market may come here and then come to use the OB. So you may keep your stop loss all the way below here just to avoid all the rubbish. That should not be how you trade. You understand? If you're trading, your trading should be precise. That is for you to make the most out of the market. It's still okay if you want to use your stop loss and cover the whole entire zone in the market simply because you want to stay in the market for a long period of time. But majority of the time that my point of interest has been violated, market does not tend to go my direction. It's only a few times. I don't think it has happened to me recently. The moment price hits my point of interest and then fails it and hits my stop loss, provided I put my stop loss in the right place it's supposed to be for the point of interest, market, if it violates it, it means that that setup is wrong. So that is why we have these rules in picking a point of interest. So the first rule says there must be a market structure shift or a double break of structure. Like I said, the strategy is nothing without structure. And then when it comes to trading structure, we only pay attention to two things. We must either see a market structure shift or we have to see a double breakout structure. Meaning that you don't look for a POI, you don't look for anything at all. You don't even look for inducement until you ensure that you have seen either a market structure shift or you have seen a double breakout structure. So the moment we got, for example, in this scenario, we had a previous downtrend and then price took this high out. The moment this high was taken out, we already fulfilled the first rule of picking a point of interest that says there must be a market structure shift or a double break of structure. That is the first rule. So the moment we got a market structure shift when this high was taken out and price closed above that zone, we already fulfilled the first rule in picking a point of interest. Now, in this scenario here, we're talking about the break of structure part here now. When market took this high out, and then this high and this high, we got what we call a double breakout structure. So that is the first true in picking a point of so once that happens, you have to look at the job will be. In fact, it's the time. So technically, it's just one point of interest. This one is even very, very easy because it does not really give you a lot to what it does not give you a lot to pick from. It's just one simple POI that is here because the breaker block, the body of this high that was taken out, and the other block are on the same line. So it's merged as one POI. So in this scenario, we only have one point of interest here. But in this scenario here, when after market took this high, and closed above those zones, if you look below them, you have a body of the high that was taken out here, which is one POI. You have the body of another high that was taken out, which is also what? Another POI. Then you have the other block here, which is on the same line as this. So they are both actually merged on the same line. So in this scenario, we technically have the breaker, this breaker, and this OB. So in fact, even people that pick their entries from the body of the OB may keep their entry here. So let's even assume that yes, the OB, because if this OB was valid, I'm pretty sure price would have came to the body of the OB here. So let's just put it like that. So we have one POI, the breaker. We have another POI, another breaker. Then we have the third POI, which is what? This other block right here. So we have 1, 2, and 3 points of interest. That is the first true, meaning that you should see a double breakout structure first or a market structure shift. But the moment you see that, you should now look, if it's to the upside that you broke, you have to look downwards to find possible points of interest. Then if you broke downwards, you have to look upwards to find possible points of interest. That is the zones that market broke during the process of creating the double breakout structure or the market structure shift. So after you've marked out the possible POIs, you now have to move on to the next rule. So in this scenario here, the moment that price also took this high and this high out, we have what? A double breakout structure. And if you look to the downwards after the candle of that double breakout structure close, you find your possible points of interest. This high was taken out, so the body of the high here becomes a breaker block. This high was also taken out, so the body of this high also becomes another breaker block. Then finally, we have the other block that actually triggered the move to happen. So we have one, 2, and 3 points of interest. So I'll name it, say 1. We have 1, we have 2, we have 3. In this scenario, we only have just this one, so it's actually very, very easy. So that is the first picking a point of interest. You should ensure you see a market structure shift or a double breakout structure. Must be an inducement or liquidity present. It means that after you've gotten your double breakout structure or your market structure shift, and you've counted and marked out the possible points of interest there. Remember, the possible points of interest are the breaker blocks or the other blocks. The moment you marked all of them out, the next thing you should look out for is where the inducement is. You must mark out your inducement. And remember, what did I tell you guys inducement is again? What did I define as an inducement? Someone said I'm going too fast. Sorry. I was sorry. It's just how I speak. I speak fast, so I'll try and slow down a bit. Sorry. Exactly. So an inducement is the first valid pullback after a double break of structure or a market structure shift. Exactly. So that is what the second rule is trying to tell us. It's telling us that after we've marked our double break of structure or we have marked our market structure shifts, the next thing we should go and look for is the inducement. So it's telling us that without any inducement, we should not be looking for any other thing until we see an inducement after the double break of structure or the market structure shifts. So in this scenario, after price gave us our market structure shifts, the inducement should be the pullback after the market structure shifts or the double break of structure. In this scenario, we're looking for a reversal. So it's a market structure shift that we saw. Then the next thing should be the pullback that will take as our inducement, which is right here. In this one, what we got is what? A double break of structure. After that, the next thing we should look for is our inducement. And the inducement, the first valid pullback after a market structure shift or a double break of structure. And in this scenario, after price gave us a double break of structure, the pullback before price continue moving to the upside is our inducement. So that's our inducement right here. Same thing here. After the double break of structure, the pullback before price continues pushing back to the upside is our inducement. So this is our inducement right here. Before price continue pushing back up, our inducement should be right here. Even here, same thing. After the double break of, because market was bearish, and if you are still looking for more sales, you're going to use the concept of continuations, which is our what? Our double break of structure. So the moment this low and this low was taken out, we got our double break of structure, and then the inducement will be the pullback, which is after market closed here and we marked out the POIs. This week here that market gave us before continuing pushing down is our inducement. Here, the moment price gave us our market structure shift and price closed above this high, we got the first part of the rule and the first part of the strategy, which says there must be a market structure shift or a double break of structure. So after we got our market structure shift and we look downwards to mark our possible points of interest, which is this breaker, this OB, and then this OB. The market pulled back to give us an induced a pullback, a retracement before pushing back up again. We got our inducement here. So we got our inducement right there. Here, the moment price gave us, taking out this high, and close above this zone, we got our double break of structure right here. After that, the pullback that market will give us, the pullback is a retracement. So a retracement that market will give us before pushing back to the upside, be it one candle, two candles, or anything, or a single candle, as long as after the pullback, market continue moving in a direction that you got that double break of structure into, or the market still shifts into, then that is your valid pullback and that is your inducement. So in this scenario, this pullback right here, small candle wick, that's our inducement. So remember, you only look out for inducements after a double break of structure or after a market structure shifts. And for people asking me about time frames, do you guys see how I've only stayed on one time frame all through all these classes? Just 1 hour time frame. I've been using 1 hour time frame and I'm actually remember, you will not have to catch every setup on the market. You can't catch everything on that. The market will still present another setup for you in your time frame that you're on. So regardless of time frames, you will see a setup. So it does not really matter the time frame you're on, you are still going to see a setup. So that is the first and second rule of picking a proper point of interest. The first rule says there must be presence of a market structure shift or a double break of structure. And the second rule says there must be an inducement or liquidity present. Hope you guys are following me up. I'm trying to slow down because I talk fast. Some of you want to run faster than your shadows. Someone is asking me types of liquidities, and I've not even gotten to types of liquidity topic yet. Someone is asking me for top-down analysis, and I've not even gotten to directional bias yet. Someone is asking me if they can ask questions. I've not even asked for question sessions yet. Now you have to calm down. Don't be faster than your shadow. Let me teach and finish teaching. Then I will say, do you have any questions? Then the questions that you got, you bring it to the end of the class. And then it's questions regarding what I'm just teaching. Like don't ask me questions about things I've not taught yet, because you can have questions that I can actually teach, that I will still probably teach in the next class, but asking it here when I've not yet taught it. So be patient and just learn at the same pace that I'm teaching. Do you understand? Learn at the same pace I'm teaching. If I've not talked about the different types of liquidity that we have, just know that we've not gotten to that part of the class yet. Do you understand? So you just have to chill. So we have talked about the first rule in picking a proper point of interest, and then we've talked about the second rule in picking a proper point of interest. Now it's time to talk about the third rule in picking a proper point of interest. Now, the same way I'm narrating it on the real life chat, let me also be narrating it on the diagrams. So the first rule says there must be the presence of a market structure shift or a double break of structure. So we had this previous uptrend. The moment this low was taken out, we got the first rule by getting a market structure shift. First rule. After that, the second rule says there should be an inducement or liquidity. So the moment that price pulled up to give us a retracement before pushing back down, we got the inducement right here. Remember, when we got that market structure shift, the possible points of interest we have is what? This low that was taken out, the body of the low, the first breaker, the body of this low also, second breaker, then the POI that triggered the move to happen, the other block. So this is for market structure shifts. And then when we got this double break of structure, when this high was taken out and this high was taken out, we got the double break of structure. That is the first true. We must either see a double break of structure or we'll see a market structure shift. Now, after that, you have to now look down. Since it broke to the upside, we have to look downwards for possible points of interest. So the moment this high was taken out, the body of the high becomes a breaker block. The moment this high was taken out, the body of the high becomes a breaker block, and then this zone is the other block that triggered the move to happen. It's always constant. This is the zone you see the other block at. So the first POI, second POI, third POI. So the first rule has already been gotten. Second rule, there should be an inducement or liquidity, meaning that we should expect price to give us a pullback to the downside before pushing back up. When this happens, we'll mark this low as our inducement. That is the second rule. Now, the third rule says the point of interest needs to be unmitigated. Now, what is mitigation? Mitigation means price coming to tap into a point of interest after a market structure shift or a double point break of structure. Let's say, especially when creating inducement, let's say market gave us this market structure shift and then they can't do close here. If you look upwards, the points of interest you will see is this breaker, and then this OB. Now, the moment that price is coming to create inducement, if it touches any point of interest during that process of creating inducement, then that point of interest have now been mitigated. It means that the point of interest you should pick is the one that market did not touch or go into during the process of it creating an inducement. price needs to not have touched that point of interest before. So in this scenario, when market gave us this market structure shift and the price market closed below this zone, and you look upwards and mark this breaker and this other block as your possible points of interest. The moment price was coming to create your inducement and it touched this breaker block here, automatically it means that this breaker block has now been disqualified and you can no longer use that breaker block as an entry. So it's now been disqualified, meaning there is only 2 points of interest that is now left. This breaker here and then this other block up here. Same thing here. When market gave us this double breaker structure, we have this breaker as our first point of interest, this other breaker as our second point of interest, and this other block here as our third point of interest. Now, the moment our price was creating inducement, notice how it did not touch any of these points of interest while creating inducement. What it means is that this breaker, and then this other block here are all still valid to be used as entries. 3 of them are still valid to be used as entries. So that is what mitigation means. So it means that any point of interest you're looking to pick, ensure that when market was creating your inducement, it did not touch or touch that point of interest at all. That is what makes a point of interest valid. It needs to be unmitigated. So for example, when market was creating our inducements, remember, mitigation is only valid when it happens after a market structure shift or a double break of structure. You cannot say that a point of interest has been mitigated if it was touched before market gave you a market structure shift. For example, this OB that you are seeing here now, simply because this candle touched it does not mean that it's been mitigated. Why? Because it touched it before market gave us our double break of structure. So had it been market gave us a double break of structure, then came back to now touch it, then that means it's been mitigated. But because the candle wicked the point of interest before pushing up does not mean it's been mitigated, because this happened before market gave us our double break of structure. The same way this one happened before market gave us our double break of structure. So it is still unmitigated. So mitigation means that it needs to happen after the market structure shift or after the double break of structure. For example, for example, this is an order block. A market touched this other block before it continued pushing up, but this other block is still unmitigated. Why? Because market touched it before giving us our market structure shifts. But had it been that our market gave us our structure shift first, they now came back to touch this other block, that means the other block have now been mitigated. So that is the rules of mitigation. So our rules of picking a proper point of interest tells us that any point of interest you're looking to pick, ensure that during the process of creating inducement, market did not touch that point of interest. That is what makes the point of interest still valid. Hope you guys are following me up, please. Am I preaching well? Somebody say power. Mm-hmm. Good, 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 good. Exactly. So that is what mitigation is. Mitigation means price touching a point of interest. And remember, for a breaker block to be mitigated, market needs to touch the body of the breaker block. If market touches the wick of a breaker block, that breaker block is still unmitigated. Do you understand? If market touches the wick of a breaker block during the inducement creation process, that breaker block is still unmitigated. So it needs to touch the body of the breaker for it to be mitigated. So the rules to picking a point of interest tells us that whichever point of interest you're looking to pick, you should ensure during the process of market coming to create your inducement, especially after the double break of structure or after the market structure shift, that it did not touch that point of interest. That is the third rule in picking a proper point of interest. So anyone that market has touched during that process automatically disqualified. So when market was creating inducement, it did not touch our order block here. So our order block is still valid to be used as an entry. When market gave us the double break of structure and it was coming to create inducement, if you notice, it actually touched the body of this breaker block here. So what does it mean? It means that this breaker block has now been what? Disqualified. Which is now leaving us what? With what? This breaker here, then this other block down here. This one is still valid. This one is also still valid. When market gave us our double break of structure up here, taking this high out and this high, the moment the candle closed stopped, if you look downwards, you find the possible points of interest, the breaker here, then the other block here. And if you pay attention, while market was coming down to create inducement, it did not actually touch any of these POIs, meaning that all these points of interest, that is this one here, this breaker here, and then this other block here, are all still valid to be used as entries. So all of them are still valid. We leave it. In this one, when market gave us this double breakout structure to the downside, after that, price gave us what? An inducement. And if you pay attention, during the process of market creating inducement, it did not touch this breaker block, or this other block, meaning that all 3 points of interest here are still valid to be used as entries. Also, when market was creating inducement here, if we check, after market gave us a market structure shift in this level, this MSS here, market came down to create inducement. But if you pay attention, this breaker block that was here, when market was creating inducement, it actually touched this breaker and even went deep into it, meaning that this breaker block here has now been disqualified. You can no longer use it as an entry. It's been disqualified, meaning that it's now left with this OB here and then this OB down here. In this one, the market gave us this double breakout structure and closed above this zone. The body of this zone becomes a breaker. The body of this high becomes a breaker, and down here is the other block that triggered the move to happen. You have 1, 2, and 3 points of interest. But during the inducement creation process, market did not touch any of the POIs here, meaning that all these 3 points of interest are still all valid to be used as an entry. So that is the third rule in picking a point of interest. Ensure that the point of interest you are picking is still unmitigated, is still untapped, while market was coming to create an inducement. Are you guys following me up well? Mm-hmm. Person say Power Rangers. Don't worry, if it's confusing to you, that's why there's time to practice. You will practice. Remember, someone came and told me that you're not teaching everything you know, that after learning that he's having losses, and the person was in June class, and I checked how many people have taught, and it's always people saying that they like everything is working for them and everything is working for them. And I'm saying out of 3 or 4 thousand, and then if let's say 20 complain, is it the 20 people that are right, or compared to like the 3,800 and something that are? I said, no, you don't know how to apply what you are taught. Because in a class where the teacher teaches well, there are still people that fail woefully and get F9. In a class where people just have to apply what you are taught, something must not work for everybody. I can't become a doctor because you understand, and I can also do this. Not everything I must do. If it is not working out for you, you leave it. There are people that are not smart at all. So, and there are people that actually can put in work to make something work for them, no matter how hard it is. Eventually it's going to work if you actually put in the work and practice. I can only teach you how to become a good trader. I can't force it inside you, and I cannot make you a good trader. Everything I'm teaching you is what works on the chart repeatedly. If you go to the chart over and over and over again, it works. Someone is asking me if the inducement touches the wick of the breaker. I mentioned it here now. So that's why I say you should pay attention. I said if the inducement touches the wick of the breaker, is still unmitigated. For you to mitigate the breaker, it needs to touch the body of the breaker. Do you understand? So hope I can continue what I was teaching. All right, so now it's now time for the final rule in picking a point of interest that will now close everything for us. Because like this now, in the examples I gave you guys, one has 2 other blocks. One has 2 breaker blocks. There are multiple POIs there. Some has the other block below, some has it above. So how do you pick your point of interest? The final rule now says, pick the point of interest closest to the inducement. So after you've marked out the POI, marked out your inducement, disqualified the ones that have been mitigated by your inducement, you now have to now pick the point of interest that is closest to where your inducement is. So in this first scenario here, where is our inducement? Right here. Which point of interest is the one closest to it? This number 1. That's why the entry for this trade was from this other block right here. That is the first trade. The second one, after we got our double breakout structure, we got our inducement, and we marked out all the points of interest and disqualified the one we can disqualify. Is now only left for this breaker and then this other block. But where's our inducement? Our inducement is right here. So between this breaker block and then this other block, which one comes first to where this inducement is? If you trace it down, is this breaker block. That was why the entry for this trade was from this breaker block right here. So this is how you pick your stop loss for the breaker. You see, normally this breaker has the shape of an order block. If you are picking an entry to sell from this OB, you would have kept your entry for the sell somewhere around here. Like this is where you place your sell for this other block that was here before. So that's how you place your stop loss. The zone you would have placed your entry for the other block that now became a breaker. That's where you place your stop loss. So this is where the stop loss for the trade would be. So this was the second trade. The one closest to where our point of interest. It was the one closest to where our inducement is. Our inducement is right here. Since it's already touched this breaker, it already disqualified the breaker. It's now left for this breaker and this OB. But since the breaker block is closest to the inducement, that's where the one we picked our entry from. Now, this last one, this third one here, price gave us our double breakout structure, our inducement, and then if you check the points of interest, this breaker, and then this OB. Our inducement is all the way up here. But if you trace down between this one, and this one, the one closest to our inducement is what? This breaker block here. That's why the entry for this trade was from this breaker. That's why this trade came from here. So, why I kept my stop loss at this second breaker block here is because I know that me picking my entry from this breaker would have been a missed entry. Sometimes I have to apply logic to trading. If you wanted to keep your stop loss at where the end, this would have been all the way down here, and it will make your stop loss really large. If you're okay with that, fine. But me, I understand that there's a breaker block here and another breaker block here. And since this is the right one, market should not get to this second one. Meaning that the one that would have been a missed entry, I would rather keep my stop loss just below that one. That's why this trade was taken from this zone here. So the first trade with the rule of picking a point of interest, second trade with the same rule, third trade with the same rule. After that, this sell, after price gave us what? This double break or social to the downside, we got the first rule in picking a point of interest. Gave us an inducement. We got the second rule in picking a point of interest. The points of interest here, price did not touch anyone during the process of creating inducements. We have the third rule. Then the final rule says, pick the point of interest closest to where your inducement is. And where's my inducement? Right here. And if you trace up, the point of interest closest to it is this breaker block here. That's why the entry for this trade was from that breaker block right here. Stop loss as where we would have placed was the trade. To the next one. After price gave us our market structure shifts, we got the first picking the point of interest. It came back and gave us after that, we marked our possible points of interest, the breaker block here. Interest. After that, price gave us the second rule in picking a point of interest by giving us our inducement. Second rule. Third rule, check the unmitigated points of interest. So market was coming down to give us an inducement. It touched and went inside this breaker, automatically disqualifying this breaker means that we can no longer use it as an entry. And it's now left for this other block here and the other block down here inducement is. And if you should track it down from this inducement level, the one closest to it is what? This other block. That was why the entry for this trade was from this other block and not from this one down here. Stop loss are the last candles of the other block here. So the second trade. Even this continuation self, the markets gave us this double breakout structure, taking this high out and this high. we got a double break of structure. After that, you have to look downwards to find your possible points of interest. And if you look downwards, the body of this high that was taken out is the first one, the breaker. And then down here is the breaker block, but it also matches this OB. So it's actually one setup, one POI. That's the first rule. Second rule, there should be an inducement or liquidity. And the moment price put back down before pushing up again, we got our inducement. The third rule says the point of interest needs to be unmitigated, meaning that when market was creating inducement, it needs to not have touched any of these points of interest before. And because price touched this breaker while it was creating inducement, we're automatically disqualifying this breaker block here, which is now only left for this OB here. And then the last rule, pick the point of interest closest to the inducement. The inducement is right here. This one is already disqualified, so we're no longer using it. The one closest to the inducement is this zone. That was why the entry was from here. Stop loss at the last candles of the OB. Still going. After price took this high out and this high and closed above it, we got our double break construction. After that, if you look downwards, you will find your possible points of interest. This high that was taken out, the body of the high becomes a breaker. The body of this high also becomes a breaker. And then down here is the other block that triggered the move to happen. 3 points of interest. Second rule, there needs to be an inducement / liquidity. The market gave us this retracement before pushing back up, we got our inducement. Third rule, the points of interest needs to be unmitigated. Means that while market was creating inducement, it needs to not have touched any of the points of interest you want to pick. And because market did not touch any of these points of interest, all 3 are still valid to be used as entries. The final rule, pick the point of interest closest to where inducement is. And which point of interest is that? Trace it down. Is this breaker block right here? So if you pick your entry from the breaker, stop loss below the last candles of the breaker, which is there's a wick here. So I'm covering that wick. This is where your stop loss would be. So that's this trade right here. So you see how every trade I literally picked from here, both this sell, both the buy, both the buy, both this buy, all of them obeyed all the rules of picking a point of interest. All of them obeyed all the rules. Someone said I'm too fast. Jesus. It's my natural nature. I'm very fast and I really try to slow down, but sometimes I just forget. But the class is recorded, so anyways, you can always just revert back to the recording and you understand what I'm saying. It's not going to be a problem. Mm. So if it's a pin candle is an order block. You still mark it the same way. Still mark it the same way. You still mark it the same way. Someone said I should explain the current trade I took today. Okay. But I took it on a lower time frame because market was very volatile. But let's go. So when I talk about directional bias, you guys will understand it more. But right here now, we had markets on a downtrend, giving us lower highs and lower lows, a downtrend. Then all of a sudden, price took this high out and closed above the high. The moment that happened, remember I said before market can start reversing, you must first of all see a market structure shift. So when market was on this downtrend, before it started reversing, it took out this high, giving us our market structure shift. And once you get an MSS, what does that mean? Whichever direction market was trending at before, you are going to now start trading at where? If if you are trading, if you have an MSS, whichever direction that market was trading at before, you're going to start looking at trade as what? Opposite direction. Yes. So since market was, when I talk about directional bias, you will see why this zone was my reversal zone. But that's when we talk about directional bias actually. So whenever market gave us the MSS, we already got the confirmation that this downtrend is now changing direction to the upside. That's when market closed at this zone. After what the MS says, you have to look downwards to find our possible points of interest. So when this high was taken out, the body of this high becomes a breaker. When this high was also taken out, the body of this high becomes a breaker also. And then down here is now the other block that triggered the move to happen. So we have 1, 2, 3 point of interest. Good. That's the first rule. Ensure you see a market structure shift or a double break of structure. Second rule, there needs to be an inducement / liquidity. Normally, this would have been our inducement right here. But the inducement did not go up to take out this high and close above it. So I did not use that as my inducement. It was only when market pulled down well and then came up to now take this high out. That's when I now said this is my inducement. So that is the second rule. There should be an inducement / liquidity. Third rule, the point of interest needs to be unmitigated. When market was creating the inducement, this breaker block, this one up here, market touched it and mitigated it. So automatically, I'm disqualifying this breaker block and it's no longer part of the entry. Disqualified. Which now leaves me with what? This breaker here and then this other block down here. The final rule says pick the point of interest closest to your inducement. Since this one has been disqualified and my inducement is right here, trace it down. The PI closest to the inducement is this breaker block here. That was why the entry for this trade was from here. That was how I was able to take this BTC buy. So I just took it and targeted this nearest OB here as my take profit. But it's still going to run. I'll just find more confirmations for that later. But that was how I was able to take this particular trade. 1:10 RR. If I risk 1K on this trade, you are making 10K. You risk 2K, you are making 20K. Risk $100, you are making $1,000. Simple as that. The same thing I just taught you guys now, the rule of picking a point of interest. That was how I was able to get this set up. So, um, if you have any question, I used the 15 minutes time frame because market was very volatile. Like market was very fast, moving very fast. The whole drop was very volatile, so I had to go down to a lower time frame to get my entries. So if you have any questions, just raise your hands up with the. Remember, the questions has to be with about what I've taught. Please, if you have questions outside what you guys listen to me as I'm saying this thing now. Someone will raise their hands and ask questions that's not about what I'm teaching. I swear to God, just wait, you will see. But the question should be about what I've taught you guys. Do you understand? So we can understand. So we can have other people. Normally, it's supposed to be a 1 hour class. It's already 9:03. So me taking the question will still take longer, but I will still do it. So about what I've taught, if it's confusing you. So I'll start with Oladapo.
Good evening, Tony. Thank you very much for this class. Please, I want to ask a
Yeah,
question based off
yeah, good evening,
the.
Oladapo. Your network is a bit bad. I can't really hear you well.
Oh, can you
Mhm.
hear me now? Can you hear me now? Can you hear me, Tony? Chai. Good evening, Tony. Can you hear me?
Your network is a bit somehow, but yeah, I can hear you now. I can hear you now.
Okay. So please, I want to ask a question based off the last rule, the fourth rule of picking a point of interest.
Yeah.
Please,
Okay.
can you go to the BTC USD chart? Sorry. I want to there was a recent thing that happened on 45-minute time frame. I want to use that as an example to show
Okay.
what I want to ask about.
I'm on the chat.
I,
I'm on the chat
okay.
now.
I cannot see it. I can't see the chat.
What's your question now?
The question I want to ask is that there was something that happened on BTC USD recently that
Now, why?
the the closest order block to the inducement um was not used, but price went to
See
use
what
one
we'll
that
do
was
here.
before
Just
that
DM
one.
me on WhatsApp and send me that question.
All right, all right.
Hello, I'm here now. So ask your question again, please. Or you DM me on WhatsApp and send it to me with the screenshot of it because I'm talking about questions I'm asking you guys now is the questions regarding what I just thought. Like if you have any difficulties, ask the questions. If something you have to ask me on, like you already have a chat of, provided it's not a setup that is there to play out and it's something that happened based on what I've taught you guys, you can ask me the questions because there are people that are asking me questions about a setup that said someone asked me that question in my DM today. I did not reply on I'm back. Zoom kicked me out. It's not even Zoom disconnected me from this. And I had to go and join back from the link I sent you guys um on the distance. I don't know why Zoom kicked me out, but I'm back. So I will start this thing again. If it's a question that you have, someone asked me a question about I told people not to send chats that are yet to play out because for example, now someone asked me a question today. My other block trade missed. Why did it miss? And then it's because of a breaker block entry, and the breaker block entry have not yet been taught. So that was why I said you have to wait till we teach more classes because most questions you have that I've not talked about will be things that we'll say have to teach. So now that we actually taught the breaker, if the person actually had patience to wait for the breaker class to be taught, they would have actually gotten that entry. So that's so if it's something that happened on the chat and it missed, just know that we have not yet taught it and it will be taught. So my questions will be about the things that I just taught you guys here. If you don't understand, just ask the question on it. Yang,
Yeah. So my question is about your last trade. Um, the break or structure you choose, the market structure. I don't understand why you chose that one because there are still highs below the the high you choose.
how?
Your Bitcoin trade.
Yeah.
You can check on the charts.
Which highs? So let me share my screen. So
Yeah.
which highs?
Zoom in.
I'm zoomed in.
After the last low, we still have like one high, the second high before the market structure shift. So why are we not using this first high that was formed? It's just confusing.
Is it this one? Wait, is it here?
Yeah, I'm talking, yes, that one.
Okay. So the dynamic of a downtrend is lower highs and lower lows, meaning
Yeah,
that each high should be validated with a low. Each high should be validated with a low. This
okay,
high was also validated with another low. This high here, they don't take this low out. And this was the last high. I'm sorry, this was the last low. I don't know how to explain it, but this high didn't actually make, if this high like this, something like this, made a lower low,
okay.
then on
I
price
mean,
take high
if it
out,
broke structure,
yeah, it would have been valid, but it did not. Do you understand? So, and also, this would have been proper if this was like a continuation trade. Would have used this as a double break of structure.
okay,
But you are looking for reversals, meaning that it should be a stress shift. Because now, if you are using this high, market is moving to the upside while breaking this zone, and this is an example of a break of structure. A market stress shift
okay,
means market um shifting direction from the previous trend. And if you actually used this high, it means that you're now trading in line with the current trend, which is the new uptrend. So this
okay,
would be a break of structure and not a market structure shift. And break of structure is only used for continuations and not reversals. So that's why we focus on the high here, because this high actually has a low, and it was the same high that was made during the downtrend process and not during the uptrend process.
okay.
Yeah.
I understand. Thank you.
White tree.
Yeah, good evening.
Yeah, good evening.
Yeah, please, I would just want to know, how do you mark your order block? Is it from the week or just the body?
In the last class, the first class I did, I mentioned something like that. I said something about if the week is longer, if the body is smaller. So I think you should just watch that recording because it's there. It's there in the recording. So Zoom user. Zoom user.
Good evening,
I'm
sir.
asking you to unmute yourself. Yeah, good evening.
I'm having issue with like your breaker block. You know, you said the breaker block must be engulfed. In this your
No,
trade,
no, 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 no. I
like
said the other block must be engulfed, but a breaker block is the body of any zone that market breaks.
the body of any zone that market breaks.
Yes,
Okay.
especially if it happens during like if market gives you a double break of structure, the body of those zones that market broke during the process of creating the double break of structure. But things that they mostly have shapes of old other blocks, but it doesn't matter if it's engulfed or not, as long as it's a zone that
Okay.
market broke.
Okay,
Yeah,
okay, sir. Thank you, sir.
yeah. Big reason. Big reason. Hello, I'm asking to meet so you can ask a question.
I'm done.
Big reason. Okay. M Adil.
Yes, can you
M
hear
Adil.
me?
Yeah, I can hear you.
Right, so I just want to ask one thing, everything else is cleared.
Yeah.
Just little one thing, you haven't mentioned it, but I just want to confirm, is the sweep important before MSS?
We don't use that. Do you understand? So the thing is that when we're talking about everything will make sense during directional bias. There are actually zones in the market that triggers the MSS to occur. You can't just pick an MSS out of. If you pay attention, when I picked my MSS here, I also marked a zone with this blue box. It means that this is the zone I'm expecting price to react from. Before I can expect an MSS. So the sweep is not really important as long as it has the structure shift or the double break of structure, and if it has all the other rules for picking a point of interest, you can use it. But the thing is that most importantly, you should trade in the right direction. That right direction will be covered during directional bias. So if I didn't mention
Right.
it, just know that it's not important. Yeah.
Okay, and a little bit one more thing. So before MSS, sometimes I see a low being made, and then price gives an MSS, and then price comes back to take that low as liquidity and take the POI below it. So I just want to confirm if and on the lower time frame, it's exactly like the strategy you taught us, but on the higher time frame, it seems like a low made before MSS.
I don't really understand. An MSS is basically is changing direction or changing from the current pattern of the particular trend is on. So whether a low was made before the MSS does not really matter if whether a low was made or a low was not made. As long as market deviates from the current pattern of the particular trend is on, then that is what an MSS is. An MSS is a market structure shift. It means that whenever markets should deviate from however it was moving when it was on this particular trend, if an uptrend is higher highs and higher lows, and market does a lower highs and then does a lower low, that is still an
Yes.
MSF. Yeah. So whether the low was taken or the low, as long as market deviates from the current pattern of whichever trend is on, that's an MSS.
All right. Yeah, that's fine. Thank you.
Yeah. Kenny Black.
Hello.
Hello.
Okay. Please, I would like you to share your screen. I
Okay.
saw something on BTC. There's
Okay.
one example you showed us on August 3rd.
August 3rd.
On the 1 hour time frame. Just
Okay, here.
yes. So
Okay.
this market structure is now that you
Mm,
showed here.
mm.
I don't I don't see how like this thing the candle broke the previous downtrend high, but I'm seeing the one above.
Okay. Let me show you
You
how
understand?
let me show you how it broke it. This is the lower high. This is the lower low. This is the lower high. This is the lower low. This is the lower high. And then price came here and made a lower low. So this was the last high that caused a low. The market came and took the high out. That's the market social shift there.
Okay. So that means you're also using the week as the break of
Yeah.
structure.
Yeah.
Okay.
That's not really a break. That's just a pattern that price moves at. As long as that happened, all I know is that was the last high that actually made anything that looks like a low. If it's one I'm talking about, a proper break, if I was looking for like a double break of structure, then no, I wouldn't have used this week as it, but I was looking at like a trend movement. That was why I was able to count it. So that's actually the high that got taken out.
Okay.
Yeah.
So that was what got me confused because I was looking at the more bigger one. I can see
No.
the up and the down one, but all this one you marked here now seems to be inside the one that was this the lower one before it broke it.
It's just all of them. If I start counting the same thing, it's the same thing over and over. Like if I actually like follow each of the process, the ones I pick first, see this one, lower low. So after this low, that price took this high out. So if this high right here, if this zone actually like came down here a bit and pushed up, I would have counted this as the MSS, but it did not.
Okay. So my next question is please which um um broker do you use for your charting? Because I marked out this same um setup on BTC, but price did not mitigate my POI. Then went up.
I
The
use
trade is good to go.
if it's crypto, I use Coinbase. Like if it's BTC and this, I use Coinbase. But if it's
Okay,
normal like gold and the rest of the currency pairs, I use Forex.com.
that's all. Thank you.
Mm. So what you cook, Peter? Peter, totes.
So, good evening, everyone. Good evening.
Good evening.
So, just open the chat. The last, like your recent BTC trade.
Mm-hmm.
The recent one. No, the recent one, like the last one. The recent, yes. So, I don't know. That your inducement. I don't know. Is it because it was a bullish candle? That's why you didn't use it.
No,
Because
no,
I
no,
don't know.
no,
It's
no.
kind of
I didn't use
okay.
it because this did not break this high. At least it didn't even get close. It tried to, but it was immediately rejected.
Okay.
So, so but this one actually
Okay.
broke past this zone. Like this, the high of where the social shield stopped.
Okay.
This one, yeah. So this one broke past it. So that was why I picked this
Okay.
as the
Okay.
inducement. Mm, mm.
Okay. Okay.
And Big Rocky.
Good evening, sir.
Good evening.
Yeah, my question is to know a valid market structure shift. If the if it closes the market structure shift with a candle wick, is it valid or it must be a body of the candle?
It must be a body of the candle.
Okay, sir. And how are we going to determine our take profit?
I've not thought that now. Jesus. I don't think.
All right, sir. Thank you. Thank you. Thank you, sir.
Yeah. Yeah. Precious.
Good evening.
Yeah, good evening.
So, so my question is, if price already creates a double break of structure, provides inducement, and you already have your PY marked out, and then the market continues to trend along the line, it
Yeah,
creates another double break of
wait for
structure.
yeah, wait for that one. Wait for that first one. Wait for it. Wait
Okay,
for that one.
okay,
Yes,
okay.
the price will come to it. Wait for it. Yeah.
Thank you.
Mm. Damn.
Good evening, sir. Good evening,
Yeah,
everyone.
Good evening.
All right, so my question is concerning the structure of the market. You said we have um, the reversal concept and the continuation concept. So
Yeah.
if the market is trending downwards, and we're actually looking for continuation. Now, looking for continuation, we needed to have double break of structure, and let's say we had double break of structure, and then it created an inducement, which we say it is a market structure shift. How are we going to confirm that this is actually not a market structure shift? It is just an inducement to continue, because checking out all of the examples, I've seen that during the reversal process, we still need to take out inducement, which we
Yeah,
call
but
the market.
the inducement is taking out inducement is not a structure shift. And at the same time, there are zones where market trigger structural reversals from. Market is not just going to all of a sudden start reversing at like a random place. That's why I said when we talk about directional bias, it's going to be clearer to you knowing the zones that market will reverse from or the zones you're expecting structural shifts to come from. If you are already bearish and you're looking for double break of structures to sell, you're going to actually have a target where you're expecting the market to get to overall. And if market has not yet gotten to that target, you're not really expecting market to start reversing. So even if you see an MSS, you will probably know that it's fake. So when I'm talking about directional bias and I teach the other different types of liquidity that we have, market will always try and sweep liquidity. So if the MSS you are seeing, like coming to sweep inducement, you're considering as an MSS, it is not because every MSS must still have an inducement. So you thinking that market sweeping your MSS to trigger your point of interest is giving you an MSS, then is there any inducement? No, because once it triggers it, it will just continue going to take out the low. So if you already have your setup and it's bearish, you have your double break of structure, you have your inducement, and you have your POI, stick to it. If market is sweeping your inducement to come and trigger your POI, it's not an MSS because MSS don't just come out at random. There are zones where the MSS will occur. And when we get deeper into the class, you will understand what I'm talking about.
Okay, perfect. Please open your BTC correct trade. I want to show you something.
Mm.
Right, all right. To the lowest of this price, you see, when you marked out your MSS, if you check out based on what you just said, that we need to see a lower low before we can confirm our break of our market structure shift. But if you check out the last low of this price, all of
I
these
didn't
same.
say it needs to be a lower low. I just say it needs to push market close to the last low. And this, like, you guys, I
No,
don't know
I'm not
why.
talking about this. I'm not talking about
Which
this
one?
low. I mean the last, the fall, the dog, the fall. Go back, like
Yeah,
the last. Yes, this. If you check out this now, looking from this price action, there was no market structure shift. It was all inside this candle. So that was what I'm trying to understand.
that's why I did not trade anything from inside here because it was too volatile. So I had to just keep waiting until I see an MSS. And eventually I saw it here. It does not matter where you see the MSS as long as it still happens. Market was very volatile. This zone is on the daily time frame. When it triggered, market was dumped very hard and then pushed up. So obviously, I know that I will still see an MSS, so I just had to wait. I waited until it presented itself later on, and then I took it.
Perfect. Thank you.
Vincent,
My question have been answered already. Is about the market, the MSS.
okay. Please, if your
Yeah,
question has
thank
been
you.
answered, just please lower your hands, please. Um, guys, if your question has been answered, just lower your hands, please, so that the ones that don't answer I can pick them because it's already more than an hour, and I have to start getting ready to trade the market. It's already 9:31. It's going to 2 hours. Jesus, big reason. I've already picked you up before now. I've picked Big Rizzy up before now, I'm sure. Huawei. Huawei, you have a question. Please, if I ask you to unmute yourself, please do so fast. Okay. Shams,
Hi, can you hear me?
I can hear you.
Yeah, I have a question related to the double break of structure. If you just go to your latest trade that you took on BTC,
Okay.
let's say if we are looking for the continuation, my question basically is, let's say we form a double break of structure and the price gave us a pullback and then it formed another double break of structure. So I want to ask, like, should we consider the first double break of structure or the second one?
The first one, obviously.
So even like if we are getting other double break of structures, we'll ignore them.
You take the first one, the most valid one, as only if maybe the first one. Sometimes markets let's say something like this happens. Let's say you got your MSS here, and then you got a double break of structure like here, but market was too impulsive and it just broke to this zone. It's going to be very hard for market to make a full retracement to this level. So if there are actually other structures that exist here, then you can actually aim for the closest one. What is that the buys may not really happen for a long period of time. You can just when I talk about take profit levels, you know when to once you take those trades there, you take your profit at the nearest exit because you may still be looking at the ones down here. So it depends on how
Mm-hmm.
impulsive the market is at the moment. If market was just moving at a normal way, like at a normal rate of price actually making its movements, then whichever recent one that market breaks, look for it and then take the trade. And sometimes continuations do not actually form all the time. Trust me, if you miss the main entry, you may get maybe like two chances to get the continuation trade. The rest of it may not trigger you in. The continuation will actually maybe work the first and the second time you pick your entry, but on the long run, you may not really get opportunities to now take more. For example, if someone that took a sell from this level, maybe got another continuation from this OB here, we don't really have any opportunity to take more sales from this drop that happened from here to here. So it does not really mean that every breaker and this thing you pick is going to work. But you can try. If it works, fine. But if it does not, then your luck also.
Okay, makes sense. Another question is, like, sometimes if you go on lower time frames, you can see those MSS or double break of structures happening. But if you go on higher time frame, those things still have to be done, or we have to wait. So should we prioritize higher time frame or the lower?
Like I said, it depends on the kind of trader you are. If you're a day trader, I would suggest sticking to the 30 minutes for or 1 hour time frame. So whatever has been done on the 1 hour time frame, you can. Besides, if you're trading on the lower time, let's say 15 minutes time frame, for example, four
Mm-hmm.
15 minutes can makes up 1 hour. So even if on the
Yes.
15 minutes time frame there's a break, it needs to actually last for a full 15 minutes before one candle can close. Then the next 15 minutes candle will probably form the inducement and then break above the other high. Then the next 15 minutes candle can now probably be like a retracement coming down to trigger your point of interest. So it may literally also still take 1 hour, 30 minutes for a full setup to form. If you go on the 1 hour time
Mm-hmm.
frame, it can just be 1 hour forming for the this thing and the 1 hour again for the entry to be triggered. So it's basically all relative to the same time. Doesn't really matter, your setup will still
All
be
right.
there. Yeah.
All right. Thank you.
Yeah. Gift of men. Gift of men. But I will make it be woman, no. Because if the man they answer gift of men, I don't really understand.
Now, man, the answer.
Jesus.
Good evening, Tony. Good evening, everyone. Okay,
Mhm.
so my question is close to what the first person asked. I've seen your chart with different time frames, so I think you explained a little of it. But I wanted to find out, in the last example you showed us a zone from when the reaction took place. So do you also pay attention to if that was reacting on maybe a 1 hour zone? Does it inform if you now use a 5 minutes, or does that really not matter? I don't know if you get my question.
That's
Like
why I
that
said
zone.
I know that's why I said I would teach directional bias. In directional bias, I will talk about the higher time frames for picking directions or the zones the market will come to. then the confirmation for it. So that's why I said you guys should just be patient. Or get directional bias is going to be clear. Joseph Moses. I'll soon be going off soon, guys, because it's taking. I don't really understand. Yeah.
I
Yeah,
wanted
just
to like if like you are expecting a market structure shift, then an impulse move now like appear, then it's supposed to like come to take the lower the lower movement of the impulse move, but instead it started like ranging in how will I even put it? It started ranging internally. It did not take out the high, it did not come and take out the low, but between the ranging, it now created another market structure shift. I don't know if that's also valid.
when don't worry, when we talk about different types of liquidity, you understand what we call ranging liquidity. Most of the questions you guys have are on classes I'm still yet to teach. In fact, I'm not even understanding people's question again. You are making up scenarios. There are classes for me to still teach that will make you guys understand some kind of things. I don't really understand the questions again. Fat matter, Sanko.
Hi, Tony.
Yeah, hello.
My question is, what are the sessions you trade, or you just see yourself then hopping?
I'm mostly active during Asian session and London session, but the thing is that any session I see my setup, I just trade. I'm always active. Like I'm always active on the chat. Not like every time, but during Asian sessions, I'm active. And then if I mostly see my gold because I trade gold and BTC during Asian session, gold and BTC move well. So I must have entered my trade then I can just maybe go off or set my TP or my stop loss. So by the time I wake up during London session, one must have hit. So I may still take one more trade if I'm looking during the London session also. But it does not matter. Setups will always form regardless of the session.
Okay, thank you. I appreciate it.
Mm. Coach Swiss,
Good evening.
good evening.
Okay, so my own question I wanted to ask is after a double break of structure, and let's say you miss that first entry for the first double break of structure, and you want to catch a continuation, can you still use the same strategy like finding another double break of structure then to continue the move to the upside?
Yes, now.
Okay. I don't know. I actually had an example I marked out. I don't know. Is it possible? Can I show it or it's not possible?
As it played out,
Not yet, not yet. It's on
that's not
BTC, like the trade you took not quite.
that I don't talk about trades I yet to play out because if I cannot validate your entries or not, that's why I say you should focus on learning yet.
All right, all right.
Because you may still be trading the wrong. BTC may still not be overall bullish, and if I say yes that your trade is, it can be right based on how you analyzed it, or it can be wrong based on the overall trend of the market. And since I've not yet thought that, you are basically analyzing blindly.
Oh, all right. Thank you.
Mm.
Good evening, boss.
Yeah, good evening.
Hello.
Yeah, good evening, David. Let's answer these
Yeah,
questions. More they pop up. There was only 4 people here before. More they pop up. I'll be going off
no,
soon, no guys.
my hand was up. I wanted to understand where to point out the right liquidity because I'm confused. At that zone of
Eh?
liquidity, you find yourself in many where to identify the right liquidity, to pinpoint the right
How?
liquidity on any chart. That's my question.
How is it the right inducement?
Yeah, the right inducement pattern.
I thought it now the pullback that still goes ahead to take out the high or the low of where the market shift candle stopped or the double break of structure candle ended. That's the inducement, the first pullback that goes ahead now take out the high or the low of where the market shift candle ended or double break of structure shift candle ended. That's the proper inducement.
So can it be multiple candles or just a single candle?
You can just even if it's multiple candles, it's still only one that you would draw out. It's only one that you draw out. So if you're drawing out, look for the first pullback, the first candle that actually went to now. If the first candle doesn't take out the high, if the second candle is the one that goes to take out the high, you can mark the second one. If it's the third one, whichever one that goes to actually take out the high or the low of where the market structure shift candle ended, or the double broker structure candle ended, that low or high, that's the inducement. So there's only one candle that you mark in the first place now.
Okay, sir. Thank you very much. Understood.
So there are only one, two, three, four people here. Please, once I answer these four questions, now I'm done because there's only one, two, and three, four. So these four people here now. This is the one I'm seeing. We go Chuku GG, Huawei, and Rex. So we go
Hello, sir.
Chuku.
Good evening, sir.
Yeah, good evening.
Good. Yes, sir. I wanted to ask these techniques, can it be used for both volatile pair and synthetics? Because I was backtesting today and I actually use because I noticed that you are using 1 hour time frame to do your back to teach us today. So I was using 1 hour time frame to do analysis today. So I noticed that when I went down to 30-minute time frame, that other block I marked, it reduced a little. From that 1 hour, it reduced a little. So the price didn't actually mitigate that other block. That's my first question. And my second question is, how do you mark another block? Because how do you know an other block that is tradable? Because there are some other block that you said an other block is the last opposite candle before it's pushed. That means maybe that last opposite candle, then price not take it out before it moves up again. Do you get? Price will
Another
take it
block
out.
is a
Yes,
another
like
block.
price will weak. We
Another
weak.
block. Another
Yes.
block is a very. You're not looking at your other blocks before the market also shifts. If you're looking to pick it and price weak it means you're analyzing wrong. You're looking at the point of interest first. You must first of all see your MSS, see your inducement. Then you now look below the inducement or below the MSS, wherever they can do. That's when you now start looking for the ones that's actually still there. So now pick as your OB. You're not looking for the OB first. If you pick the OB first, the market can still go lower before going up to take it out again. You're looking for the OB last or the breaker last. So it is if it's a bullish order block, you see a bearish candle after you've already spotted your MSS. So you cannot say market came and took it back and go. No, you must first of all see the MSS first. See, then look below the MSS or above the MSS. So now check the POIs. Mark out
Okay.
your breaker. Then mark out the other block.
Okay.
If you go to the first class, you understand this thing better. So, if yeah, and then this is may not your break. 1 hour and the other may form. Go low in prayer side, only and the down peak breaker on the 30 minutes, but on the 1 hour is a breaker. If you follow the rules of picking a point of interest, you'll be able to get it correct.
Okay. Okay.
Gigi,
Good evening, Mr. Tony.
yeah, good evening.
Can I share my screen on quick? No, I
Uh,
cannot share. I can't share.
no, you cannot. You cannot.
Right, okay. Because I'm looking the pair of bit tensor tau, and after market structure, I could not able to find out that entry. Um, anyhow, if I can't, sir, I could not able to ask any question. Thank you. Thank you.
Okay. Huawei.
Hello, can you hear me?
Yeah, hello.
All right. Please, I want you to go to the BTC chart. It is something that I have not played, but I'm not sure for set up. I just want to know, is this a double break of structure? If you go to the BTC chart you just played at price 1128,
and price 1126. Is that to be called a double break of structure?
When this high was taken out,
And in the next one,
and this one was also taken out, plus this
not
one,
not that one. Yeah, that is. Is
yeah,
the purpose of the structure?
the double break of structure is already here. It's down here. When this high and this high was taken, they already marked the double break of structure. Okay, so this was actually
There
where
is
it came.
nothing I'm not saying that.
This zone, the first high here was taken out, and the one external here was also taken out. That's a double break of structure. Can be this high here also, and then this one. That's double break of structure.
Okay. Okay. But this two
What?
classification of can
I can't hear you.
you hear me well? Can you hear me?
I can hear what you say.
I said after the double reconstruction happened, there is a coup immediately. Are we going to call that a mitigation of both that because it touched the breaker immediately? That's structure. That's it. Valid mitigation of that.
That's now following the proper way. That is now your inducement. You cannot get them. That's an inducement. So if you touched this, then the inducement mitigated the breaker block. So even if you want to analyze, you now have to look for the PI below them. Something I just thought here.
That's the question.
You don't use that find entry where you go use take 3 BTC. No, 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 no. Since I don't know you, I know what kind of man you are. Rex.
Evening, coach.
No.
I have two questions to ask you. My questions are: is it advisable to analyze on the same time frame and execute on the same time frame? That's the first question.
Executing on the same time frame is not just to mark your POI. I don't do you guys do anything else other than when you analyze, then you set your limit entry or you wait for price to come down by? Is there any other thing you do when market comes to your POI? There's nothing else I do. So like executing is just you waiting for price to come to the POI and you press your buy or your sell. So it does not matter the time frame you're on, as long as you mark the POI and price comes there, you just press your buy or you press your sell.
Okay, thank you. This is my second question. Are we supposed to mark our market structure on the current market flow or the previous?
I don't understand. I don't really understand. The current flow is never going to be the current flow. Anything that have already happened before in the charts becomes the previous flow of the market. You just have to analyze and get what like I don't really know how to answer the question. Everything you see in the chart is the current now. If you want to get an MSS, it's what has happened already. I don't even understand the question. I'm very, very confused.
Okay, like the breaker block, share is the other block that failed,
Yeah, or
the
a zone that market
previous.
fails to hold from.
Okay, thank you.
Okay.
That's all. Yeah.
That is everyone. Guys, I'm done for this class. This is 9:50. That's close to 2 hours for a 1 hour class. And I'm tired. Very tired. I've answered all the questions that had their hands up. So I will send the recording once it's done processing to the group chat, just like I sent yesterday's on.